Stop loss. A stop loss order is an order placed with a broker to buy or sell a specific stock once the stock reaches a certain price. A stop loss is designed to limit an investor's loss on a security position. How does stop loss work in options trading? A stop loss is a type of order that investors or traders use to limit their potential losses in the stock market. It works by automatically selling a security when its price reaches a certain level known as the stop price. This helps traders avoid larger losses if the price of the security continues to drop. When should I use a stop loss? A stop loss order is placed with a broker to sell securities when they reach a specific price. These orders help minimize the loss an investor may incur in a security position. So if you set the stop loss order at 10% below the price at which you purchase the security, your loss will be limited to 10%. What is stop loss with example? So here stop loss has been set. Their number of quantities is 1, price is 2065.6 and the trigger price is 2076. So this is the stop loss price. When the price reaches 2065.6 rupees, market the order will exit automatically and the trigger price for this is 2076. Means when the price starts dropping below 2076 and in between 2076 and 2065 there will be any price between this price will the market will sell this security. A stop loss order is a buy or sell order placed to limit losses when there is a concern that prices may move against the trade. For example, if a stock is purchased at rupees 100 and the loss is limited at rupees 95, an order can be placed to sell the stock as soon as its price reaches rupees 95. What is the golden rule for stop loss? The golden rule is to have a ratio of 2.5 is to 1 or 3 is to 1 for effective intraday trading. Stop loss is normally a trade-off. If you set the stop loss level too far, you run the risk of losing a lot of money if the stock price goes against you. How do you put SL in options? When you place a regular buy or sell order, market or limit, you would be able to access the SL feature by clicking on Advanced Options, select the SL Stop Loss Order option, and then mention the SL trigger price value. Your order will be executed when the live price of the stock hits the trigger price. What is stop loss trading? When one is day trading, there is a huge risk of the trend going against the decisions and can incur huge losses. The trade trader can use the stop loss order strategy at a certain level of losses in number, and when the trend of losses or downward trend reaches this point, the trade is closed automatically to avoid any more losses. Suppose the stop loss order point is set at the rupees 70 per stock, which is priced at rupees 100. If the trend of losses reaches the point where the price is about to go below rupees 70, the trade is automatically closed or exited to avoid any more losses, meaning the trader is risking rupees 30 as loss per stock and the stop loss point or threshold never changes on its own despite the trend changes. There is another type of stop loss order known as a trailing stop loss order. In such a strategy, the threshold point is set and above which if the loss increases, it can execute itself and bring the trader out of the trade. But unlike the stop loss strategy, it is not fixed on a certain number and changes as the trend goes upward or downward to ensure the risk is minimal. SL order examples. So here the stop loss is set at 290.4. This is the blue candle is the entry candle. So this is Bank Nifty 27th March 2024 46900 call security, and the time frame used is 3-minute time frame. So when there is a red candle here at just above the stop loss level, if the red candle breaches the stop loss level, stop loss price, the stop loss will get triggered. So this is how it is set in the software system. Product type. So the quantities are 15, price is 290.4. The actual price is 292 here. So the trigger price, this is the stop loss price. If the price drops to 290.4, I will exit this trade. Trigger price is 290.6. So anywhere between 290.6 and 290.4, I will exit this trade. So I have set this stop loss like this. So this is another example. Bank Nifty March 46900 put option. So this is the stop loss level. The stop loss level, I have set the stop loss at 265.95. Now the current price is 271.86. So this is the entry candle for me. If the price goes down below this level, I will exit this trade. Bank Nifty March 46900 put. So 15. This is another example of how to set the stop loss using percentage. So 15 quantities stop loss. I have set the stop loss at minus 10%. So if the 265.95 is the current price. So I'm calculating the stop loss price 265.95 into 10%, that is 10 divided by 100. So 26.595. So 26.595, 265 minus 26.5. 265 minus 26.5. So 238. If the price drops to 238, I will exit this trade. So this is the stop loss order. Thanks for watching. Please subscribe to my channel.